morning, traders. Welcome to the TMT stock market strategy video for Wednesday, March 1st. First day of the new month. February is behind us. We had the speech last night. I personally, my opinion, which means nothing in the markets, but I just wanted to express that I think that Trump failed to deliver any consistency of what he was talking about, his campaign promises. I think he was going back and forth. But again, that's just me. Yet the markets still continue to push higher. In the pre-market session, we're up about 11 handles right now from the all-time highs, making new overnight all-time highs in all of the indices, obviously except the transports and the Russell at this moment. So where do we go from here? Well, it's the scenarios that are playing out, right? There's one of the two scenarios, and I'll go over that with you in our little scenario chart. But I feel that if the markets, Asia pushed the markets higher, we had the European session pushed it even a little bit higher. We'll see what happens today. I mean, we're extremely overbought, we're overextended, and remember, the markets are priced to perfection. However, the reality is that sentiment is driving this market higher, throwing away all of the fundamentals, all of the price models, all of any type of reality, if you will, to what the markets are actually doing. And what I mean by that is that this is where the last part of the move is the most difficult to kind of time. And you're never going to time a top or a bottom, but you want to be aware of what's going on. And I'm not talking about day trading, because day trading, you look for a spot, you identify the trend, and you get long or you get short. It's really kind of simple. That's what we teach here at TMT. I'm talking about the bigger picture now. And since the market is up, what that tells me as a professional market technician and trader is that the markets are not long enough. If you understand what that means, it means that there are still able and willing sellers trying to sell and pick a top. So that means that they have to get burned and the buyers have to get burned. So what's going to happen is, I believe now, if we hold these gains, we're going to move another leg up, and that'll put us into extreme overbought conditions, worse than what we are now. And if that happens, the shorts will throw in the towel, because they're going to probably try it again one more time. And they've been getting burned since 2009. And what that's going to happen is they're going to just capitulate, and the buyers are going to come in even more, and we're going to have a capitulatory top. And that's how that's going to work. When is it going to happen? Could happen any day. It could happen at any given day. Obviously, we need a catalyst to make that happen. And it's just going to be when Trump messes up on what his policies are, or delays any type of big policy decision, such as the border tax, that's going to come into big play. So it could happen at any given moment. And what I keep stressing is just, buy some protection, buy some puts. VIX is going to get hammered today, and that's when you want to buy it, when the VIX is at extreme lows, because what's going to happen is, when that does happen, volatility is going to explode. And at one point, when the markets go higher and these fund managers realize this is kind of silly, it's actually stupid that the markets are up at these levels without even a pullback, which is healthy, they're going to start buying protection as well, and you're not going to be able to get it as cheap as it is. So just keep that in mind going forward. Now, what I want to do is focus on what we always focus on. We do bonds, gold, oil every once in a while, and I do flip that. But I just want to show you with gold. We talked about how we have some divergence in GDX and the GLD. Well, gold is holding in pretty steady here. You can see that. And I think gold will get hammered today as well, since everybody's back in the euphoria of let's just keep buying the market. It doesn't matter what price is, price to earnings ratio, earnings itself. Let's just keep buying. And now you're gonna get to a point where now we're even further extended from our normal moving averages that fund managers look at. Okay, we'll get into that in a moment. But you see GLD here, we're holding in pretty tight. Look at the GDX. Look, this is going to be a bust here, guys. It has a beautiful inverted head and shoulders. This will probably be a bust if we take out this area 2220, okay, which probably will happen today, unless something, obviously, some geopolitical event or whatever Trump might say puts a little fear back into the markets. That's going to happen as well. So you could see here GDX breaking down. GDX usually goes first before the metal, and then once GDX starts to really break out higher, the metal does catch up on a second phase, but right now it's not happening. This is what I'm looking for. I'm looking for one more big burst down, higher low from this previous low. I do believe that this wasn't it. It just did not look right to me on the charts, price action, it didn't look right. So that's why I'm looking for one more big flush, even a test at the lows for that matter, or somewhere around here, around this area here. That's that downtrend line that we've been following, somewhere in that area here. So GDX, like I said, be careful getting long. The only way you would get long is taking out this local swing high here, $26. That confirms the inverted head and shoulders. You had the pullback, and then now we're moving higher. That did not happen, so now we're looking for lower prices, at least to stabilize, and then take at that stabilizing base, and then we start moving higher. Spiders, here's what we were talking about. We're going to break higher now. We're at, I believe Spiders trading at 237.47, so that's going to be the high of this little range. So we'll go out again and we'll extend this. This will get extended even more. Now this is right around 2.5%. Probably going to break about 2.8 to 3% higher above the moving average, which is silly, guys. I'm telling you. Buying this market way up here is out of control. Even if it goes even higher, let the markets pull back. If you just did your own homework, you'll see the markets break out, they pull back. They break down, they go either sideways and they catch up, and then they break down again, and then they break higher. So it's going to happen. It's inevitable. It will happen. It's unsustainable, this type of a move that gaps up every day and volume is extremely light, and you're at the tail end of a large bull market run, is unsustainable. Okay, let the markets consolidate again. If you really feel that you're going to 30,000 in a Dow, okay, just be careful out there. Here's that scenario chart, and it looks like we've been riding the rails, right? We've been talking about this early part of last week, if not later. This is exactly what it's doing. It's riding the rails. We'll probably go up higher, and then we'll pull back to this upper trend line, and we'll ride it probably all the way up to 240. That's going to be probably the projected target. It's going to be about 240, and that'll probably happen and occur. It could happen in a couple of days, the way this crazy market is doing. But anyway, that is exactly what's happening at the moment. Yes, we still could get the pullback down to about 231, 233, and then rally and go even higher. I don't think that scenario is going to play out. It would have done so already. I think now we're going to just go higher. Shorts are going to go get squeezed, cover, and capitulate, and really that last day where the market just goes higher and does not look back, the next day the market gaps lower, that's going to be a capitulatory top, and that's what I'm looking for. And when does it happen? No one knows, but we have to pay attention to that. Transports, again, the rest of these charts are going to be very dull because nothing happened yesterday. And IWM actually pulled back, but today it's up in the pre-market, up about 9 handles. So this will take out this high here, and this is the free Pro Trader Premier video levels. I'm just showing this to you guys, little quick view, and last is going to be the Qs. Okay, so just be careful out there. A lot of extended stocks, a lot of extended ETFs. And remember, guys, when you have a lot of the money flows that are flowing into utilities, the REITs, the staples, gold for that matter, even bonds at one point, you have to be careful. That's just giving you a warning. That's a shot off the bow here. Just be careful, okay? Have a great day. We'll see you tomorrow.